So let's jump right into it. It's been a sluggish start to the year. We've seen a real slowdown coming into it, and then obviously January, February so far have not been great. What should we expect for the rest of 2020 in terms of a pickup in activity?
Yeah. First of all, thanks very much for having me, Ed. Delighted to be here. You're right. Deal activity so far this year has been down, both in terms of volume basis and the number of deals. Last year was interesting because the volume last year was driven by mega deals, jumbo deals over 10 billion, number of deals over $25 billion in size. So far this year, we've only seen 2 deals globally that are over $10 billion. So definitely slow start. That said, there are a number of conditions that are very attractive from a financing perspective, financing of acquisitions. The U.S. economy is still doing very well. The labor markets are strong. Interest rates today especially are at or near all-time lows, so that's also very conducive. And then there's a tremendous amount of cash looking to be put to work. So certainly from a financing perspective, there's plenty of capital available to support those transactions.
And as you say, look, the financing conditions are fantastic today. I think the 10-year touched a record low today in yields. Obviously, they have been very good for a long time now. That's one of the factors that's driven this market. What's changed among the potential acquirers then? Because the conditions are there to do deals. There is willingness on the part of investors to support deals. So why have we seen that slowdown?
I think whenever there's uncertainty in the market, companies take a hard look at doing major transactions. Some of the uncertainties from last year have gone away, like the trade deal, for example. Right now, we're facing a couple of things. We're in an election year.
Which typically is a bad year for M&A.
Typically, the last 3 election years have been down relative to the year before. Valuations are very high. So if you look at how companies are valued right now, they are well valued. I would also say that from a regulatory perspective, even putting the elections aside, we've seen more regulatory scrutiny around deals. And then, of course, today, we need to think about the coronavirus and the impact that that's going to have. And if you think about uncertainty, that's a very difficult thing to predict. Certainly the positive sides, though, we talked about the fact that the financing markets are in great shape. There is a lot of pent-up demand out there. If you look at the M&A bond pipeline, right now we're sort of mid-50 billion in terms of deals we're expecting to come to market. That compares to a 5-year average of around mid-90 billions. And at certain points of time, we've seen that pipeline above 150 billion. So certainly lots of money available to be put to work. And I think when a company is looking at a transaction, that's obviously important, where the cost of capital is going to be to finance
And
it.
where are we going to see that strength come from? Which sectors in particular? And indeed, is it going to be strategic or sponsor activity that drives the market this year?
Right. So the areas that we've seen really strong support for the past couple of years, and certainly going into 2020, I would say technology first and foremost. That's both from technology companies and non-tech companies buying technology, which is really important given disruptive scenarios we're seeing. In addition to technology, we've seen activity around the financial institution space. The 2 deals I mentioned that are over $2 billion in size were both in the financial sector. And then we've seen activity in industrials as well.
And in terms of what we sort of look for to get that certainty back, obviously you mentioned coronavirus, that's a huge shock to the system at the moment, but the market has shown its ability to sort of blow through every exogenous factor for the past few years, whether it was Brexit, whether it was, as you said, trade stuff. If we do come out of the coronavirus, is the expectation that we're sort of going to continue in this upcycle for M&A, or are we going to kind of cap out at this point?
I think companies will always look at mergers and acquisitions as they're thinking about their strategy and what the best opportunity for revenue growth and increased profitability is. And so I wouldn't say that we've hit any sort of a roadblock at this point at all. Really, it's what's going to drive growth. Is it new technology, new markets, new customers, et cetera? And so acquisitions can really drive that growth for some companies in a way that organic growth cannot.
Yeah, and I would say one fact, that we've seen a lot of in this market is companies doing stuff because actually the cost of doing nothing is very high at the moment because you will be disrupted or potentially acquired yourself. Just switching up for a minute, diversity is obviously another big part of your job. You're very involved with the diversity work at Barclays. What do you think the banking industry is doing right in terms of pushing for better diversity? We've seen a lot of statements from a lot of different banks, some like Goldman coming out with their measure, not taking companies public unless you have a certain number of diverse candidates on the board. What does the industry need to do to sort of take things forward?
That's a big topic we could spend a lot of time on. I've been in this industry for a long time, and it's been absolutely fascinating and rewarding. I think there's certain building blocks to anything. One thing is making sure that we are attracting diverse talent. So how do we attract diverse talent? There's a lot of places that are looking for great people. There's tremendous opportunity in the banking industry. There's an opportunity to learn and grow and work with really smart people on challenging issues. Banking offers an opportunity for people early in their career to have real impact on helping people and businesses grow and thrive. So I think that impact and that opportunity and telling that story is really important. Once we've gotten the talent in the door, there are things that we can do to really help retain and grow that talent. So at Barclays, for example, we have robust mentoring and very strong employee networks. Some of the mentoring that people do brings huge satisfaction, and for me, in terms of developing personal relationships and also a community of people, has been really important. So I think that's something. As an example, we have reverse mentoring, where we have junior professionals mentoring the senior professionals. I think flexibility is also really important. And it doesn't matter what your background is from a gender perspective, ethnicity, sexual, religious, et cetera. People are looking for real opportunity in their jobs and flexibility to be able to live their lives the way they want to live them. So certainly from a parental leave perspective, flexible working arrangements, I think that's important. And then managing things at the top and creating opportunities for real talent.